with fire. fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same and not waste a second of your time any more than we have to. Let's go right into the charts, shall we? Bada bing, bada boom. Here we go. Into the charts we go. So, we've been meandering around within this 786, 706.65 region. This is why we have them on the charts for the bearish trend-based fib extension level. When you get rejected off of that 236, you see that gradual descent down to this region, and then these become noteworthy levels to watch, whether you come down to the 1382 take profit region and knock out these 41 days of consolidated longs or not. You could come up here to test some of these levels once again and take out some of the liquidity. What do I mean by liquidity? Well, if you go into high block capital here, You can see where people trap their liquidity in the charts to be burnt to a crisp by the market maker for not using a stop loss. And you can see where those things get repossessed on the charts here. And this costs a pretty penny, so consider subscribing or hitting the like button at the very least, because you're about to see something cool. So we're about to lose this guy to Father Time, so I thought I would share this before and go live as soon as possible just to catch this. $297 million up at 29,967. So that guy is going to get lost to Father Time, as is his brethren up here at 30k and beyond, but their trades are still open even if they're forgotten. And let's take it more down to earth where we are currently. Why are we seeing this consolidation and not instant drop to the downside? Well, you have $282 million in short liquidity at 50x at 28,296, and a other person, his partner in crime, at 2840, a 100x pool of $194 million in shorts. And this previous 282 million in 100x shorts just got scooped up without hesitation before continuing lower, so that guy is out of the game. But they have another partner in crime up here at 28,851 that could be taken, and we're getting a lot of stacked liquidity. It looks like we're with the bubbles that are opening up in the last 12 hours or so, it's getting sparser. Everyone's locked in from back here yesterday, and not many new bubbles are opening up. So these shorts that opened up recently, as we dropped down, they just came back and ate those guys. What do I mean by that? Let's go inside and check it out zoomed in. So this guy, these $41 million in 100x shorts opened at the exact bottom, and so they gave them a little bit of profit to contend with to see how eager they are to go lower. And another pool of 37 million opened at the exact bottom. That is not a good strategy to open a short into a red candle, because they do this and come right back and liquidate you. So that guy, that $37 million character is gone.
Fatality.
And yes, they repossessed the money, so they're likely going back to this 100x character as well at 276881. Now, are they going to continue higher? That is the question. There are sparse broth down below for the ramen noodles, and you do see that stacked liquidity down below here, so they could come back into this for a super spike. We'll see how that stacks up on the higher time frame, but as it stands currently, there is a imbalance to shorts of $9.83 billion in this upside projection to eat these shorts. So the main region I'm looking at is up here at the 50x of 28,698. Okay, so round it up to 28.7. 28.7 is where this 25-50x pool is stacked up the highest, and even up here at 28.85, you could see a bounce up to there within the, either if you're going to consolidate more today or maybe go a little bit lower today. Midweek reversal just around the corner on Thursday. I think we have CPI data today. I don't know what that means. I don't even want to know, because news is boring, but you know, it means whatever their false talk to cause price action to move will make it move in that direction. So if we go to the 282 million at 25x up here at 28.85, that could be a juicy target. It starts to not really taper the entire way here on the 1 minute time frame. This is 6 days of data, and we're about to lose our friends here. Just thought we would note that that guy at 29,967 is ripe for the taking still, even if we lose his pool. All right, so let's go to the higher time frame as we expand our vision to the higher external pools. Let's start with the 7-day, as we like to do. While that's loading, let's see how it's going. Or evening, wherever you be in the world. Yo, Dingo, what's up? APV, what's up? CNC and low MIPS, what is up? All right, let's see how it's loading. All right, so the 7-day, they came back and ate this pool, about $30 billion gobbled up here, boosh, and then they created this staggering zone to induce more liquidity. We do have some billions of dollars down below to 26k on this 7-day time frame, but the imbalance is up to here on the 30k region. So do they come back to this this is very sparse by comparison. You'll see what I mean. Even though it says $4 billion here, that's nothing compared to what you see on the higher time frame. So we need to expand our vision further to the 1 month and 3 month and 6 month and beyond. So here we go to the 1 month time frame. Okay, so the 1 month time frame also has this nice, hello. All right, has this $16 billion down at 26.3, and you have double digits on the way down to that region. From 28K up to 30K, you're a bit single digit sparse. Yeah, so that sparse liquidity would need to either have a Bart Simpson up to this inverse Bart Simpson up to this region for this to be narrative path to 34K to be true. But most likely, if they come down and knock out some of this liquidity on the lower low area, that would be where you spawn the divergence to shoot this up. Until you see that clearing, you wouldn't necessarily see that super rise. So we might see a single leg to the W and then come down for a further leg. But this is just the 1 month time frame. Let's go to the 3 month. The 3 month and the 6 month is where we were previously casting the projection to the downside because of this liquidity, a little bit of happiness down here, $120 billion down at 22.4, and the entire path there caked up with 30 billion plus on each region, and a cool 100 billion at 25.2. This is why our projection here on the trend-based fib extension level leads directly to that path, which is all these longs here and their stop losses and so on and so forth. So yeah, that narrative could still be in play because that's a lot of longs down below and a big gap to go up to grab this. So the short idea could still be in play, and you could look for an entry on that short if it does come to grab these internal pools up here at 28.4. If they come up to this region and fatigue out on this region here, you could look for a juicy short off of the spawned bearish divergence of that time frame, whatever time frame that may be. As we go to the 6 month, you also see this stacked narrative to the downside. We got 70 billion at 26.4, 48 billion 26.1, 70 billion 25.8, 74 billion 25.5, 66 billion at 25.2, and so on and so forth. So now you see why we said 4 billion isn't that much by comparison, and 94 billion at 22.5, and you got your happy campers at sub 19.4 as well. So this entire tug of war to the downside by the longs pulling it down. That is what happens when you get overstacked with longs. They become dead weight to the price, which pulls the price action rope down to them, liquidating them. They win the tug of war but lose the trade. So the early time frame is where it starts to get even Steven. So but you can see the narrative path to 34.8 and beyond as the short pools start to thicken up here. So at 34.8 you have 100 billion, 55 billion, 82 billion, 78 billion, 116 billion, 98 billion, and 107 billion from 32.4 up to 34.8. So this narrative structure to the upside is getting paved up quite nicely. It didn't used to be there, as you can see. So that idea of coming back to this might occur at some stage, similar to the Silicon Valley Bank collapse, where it went down and surged right up to these pools to get 178 billion out off at 25.6. Alright, so I think we covered the liquidity quite well. I'm trying to get in the zone for the NASDAQ futures, so I'm going to get in and get out as quickly as possible, and you can watch these at your leisure. So let's go into the charts on the regular Binance chart here. Alright. So this is where the price gets trapped. So we talked about the 236 rejection at this is the bearish trend-based fib extension tool. So this 236 rejection on Saturday led us to the downside. We said if you cannot hold this 236 of the bullish projection, then you can expect more downside down to these levels at least. And we went right to that level at 786, got a bounce there, and we are consolidating nicely between the 786 and the 0.65. And until you can make a decision to either burst up above and test the 236 rejection, which also confirms a fair value gap. What do I mean by fair value gap? Well, let's go a little bit deeper into the time frames here. We already marked off those liquidity pools from the 1 minute time frame, so these characters, these bubbles over here, are marked in their pools over here at the 28.4 region and the 28.3 region, and you have a fair value gap off the wick here. So this confluence leads me to believe that eventually we come back to this region, and do we spawn some bearish divergence and head down. That would be your higher probability if you were not seeing that many shorts open at that time and the longs were getting stacked and you still had this pool down here. You could see that start to fade back down, and the run profit Friday could be to the downside. But as it stands right now, we are reclaiming the 706 region, which means the trap door to the downside has not yet been opened. So the permission is not granted to this pool just yet. Let's throw on our indicator. What is the indicator that we are throwing on here? Well, this is the... Oh, my heads-up display was on the entire time, I guess. All right, cool. All right, well, this indicator is called Momentum Master, created by yours truly. You can check out the link in the description, momentummaster.info, for more. You can read about the components by clicking at features, and you can toggle them at your leisure. You can toggle them with this interface here and see them in their glory one by one, or you can just turn on one component and read about it. Like, what's the stochastic ray? What are all these diamonds and circles and rockets? What's that? Never before seen formula which simultaneously monitors more than 7 time frames of information considering over 32 different indicator values. So this is using all the significant time frames, and it gives you a dynamic alert. What is a dynamic alert? Well, you only need to set one alert and it will update you at each one of those diamonds, telling you what the values are at that time. Is it 6 time frames overbought or 2 time frames overbought? And you can make your decision based on the levels that appear. It's not an entry signal, it's just information for you to make a decision. And our trend cloud for where it gets thin and where we start to see those reversal points. So let's go see what we're seeing in the chart. So we got a crossover event here on the baselines, and we maintained it, and then we started to get a cross down event earlier today around 1 p.m. my time. But we're starting to see the cloud shift ever so slightly. The faded volume here. Normally what we expressed yesterday, it didn't quite curve it curved in the angle we were looking at, but we didn't go up and bounce off it like this up to here. We kind of faded here at the fib level on the trend base fib and broke down beneath it. All right, so what we're doing right now is starting to reclaim this cloud after previously showing weakness and coming down out of it. So if we are holding this cloud and it's thinning, we aren't yet seeing the volume step in, so it's not turning blue just yet. So we're still at a scared point for the longs. Let's go to the higher time frame and create our story to either direction from the daily time frame, shall we? So the previous day closed with the indecision top. What does that mean? Well, that means you have a wick on the top and the bottom like a spinning top, and it's neutral because it's not bigger on one side or the other, so it's just a neutral spinning top. It is red, but you can just show it's just a spinning top at the moment. A lot of times you have spinning tops here. You had a bullish spinning top when it has this one beneath it, and then when you have this consolidation down, the spinning top could indicate this upside. So if you get this upwards, the wick is longer here, are you starting to see this buyback wick to see some upside action? There is a whole thing you can do just studying candlesticks alone, similar to this. You can see what, long upper shadow, bearish spinning top. This is a bearish spinning top by the looks of it here. So this is kind of bearish by being red. So you want to see a green bullish spinning top, I guess. So if we get this indecision doji is when it's thin on the body. So it's quite interesting. You could study all day about different type of things on not just indicators but the candles themselves. So what are we doing here? So let me remove this really quick. So the daily stochastic RSI has reset. The money flow has come back down to the RSI. We talk about the RSI and the money flow getting separated like this when you see the bearish divergence on that, and then it comes back to the RSI. If it gets beneath the RSI, it likes to come back up to the RSI. So we're currently seeing the Williams come down as well. It is crossed down and coming down to a level. It has not yet reached that green oversold status just yet. So ideally on the daily time frame, you are not necessarily oversold on multiple indicators. This gets color weighted the more things get oversold for you. So this getting overbought on multiple things gets dark blue, and when it gets oversold it gets dark purple. So we're not yet dark purple here for oversold on multiple indicators. The leading MACD is coming down into the Williams domain. We like to see that for the wake up call to the Williams. So if you get that wake up call like you did here, that's quite a surge when you get that Williams in a nice sweet spot on the daily time frame. We're not yet there, so there could be some more downside in store for that to occur. So that's the daily time frame. So once again, the baselines are not crossing up here. They previously crossed down on this large candle close. So the cross down event on the baselines. What are the baselines? Well, we talk about it every day. The baselines are your first sign of reversal. They're one of the few leading moving average formulas you will find on the market, and they start to cross down prior to dump and cross up prior to a pump. So we got a cross down event. Does that mean we are going to see this suppression and these are dynamic resistance points that we could see rejections at? Yes, and that's what happens on these cross down events. We talked about the 3-day and the 5-day cross down event prior to all of this happening. So we had you at hello based on the baselines. Let's look at the 22-hour time frame. 22-hour is reset in a nice spot with the Williams here. So you get the Williams oversold with the green color change, and you start to see this double bottom occur. So similar to here, you had this kind of meandering around for a little bit, creating that W formation out of here. We talked about this double bottom formation as well. So you've currently only seen the first leg of the double bottom. So you'd see a surge up and then another surge down, and then that would be your smooth entry and likely create that double bottom green effect if you just consolidate for another day for midweek reversal on Thursday. I have no idea what is going to occur, but we will see that CPI data release today, I believe. One thing to note is the baseline is scooping up the price action. The candle price action is currently above the baseline, the slim boy baseline here. So this is one bullish thing. We like to see it scoop in like a ice cream scoop at this nice angle. That is good for a long idea in my mind. In similar fashion, if you see the baseline close in this way below it, then you see this downside occur. Okay. We were talking about the 6 and the 4, the 6 and the 8-hour cross down events here, which led you to the short idea here. And are we starting to see that cascade on the lower time frames? We'll get there in a minute. Let's go to the 12-hour. 12-hour also getting that nice ice cream scoop to the upside here on the baselines. Have not yet crossed over, but this is where you start to see the beginnings of it. It crosses beneath it, and then they start to see these surges, and then you get that crossover event as the fat boy starts to come down. He's a little bit slower than the thin boy here. So you see this come up, and maybe it will come back down again in similar fashion here, creating a divergence double bottom event. So you might see that upside for it to come down again, but anything is scalpable. And if you look at our oversold status, this is a nice place to be for that idea to occur. You want to see these come together and create the rising sun event for that ultimate surge of golden light. So this could just be this first leg of this. See how the patterns look the same? It's something that's occurred over and over again. as of this moment, you're not seeing the money flow beneath this as much as you did here, with the money flowing beneath the RSI in drastic fashion. Here it was currently above the RSI, and now you're just back at the RSI, so you don't really have that much money flow to surge up as you did here, perhaps. Interesting to note the difference. And yeah, but that nice little baseline scoop on the 12 and the 22 is one thing to think about for a long idea. Oh, also you had the adaptive and the adaptive bounce. We're on the adaptive there too. What is this yellow line? It is the adaptive moving average. Well, let's go to see what that is. Adaptive moving average, a sensitive yet stable moving average which factors out noise and displays an accurate place where price will experience resistance or return for support. Think of this as a second line of defense or hurdle to overcome. Crossing this implies a trend reversal. All right, so we didn't cross this just yet. Interesting to note, we bounced off it 3-4 times now, and this is why this baseline is very this adaptive one with the weighted moving average here is an interesting thing to know. Are we finding this for support for the bounce up to these regions and these pools we outlined for the last few days? Could be the case based on that idea. Now let's go to the 6 hour and you'll see the same. Baseline starting to cross here. You didn't get that confirmation. You will get it in 5 hours and 41 minutes. So this could dump to the downside, and this blue line will turn purple and it will not cross down. So right now you're getting a cross up event as of this moment in time. And so when you get the cross down event as we did here, then you see this ensue. So once these close in that position as it did back here, we were in a short back here on this cross down event, and they did a stop loss hunt. We streamed it live and showed our open trade, and it was in the red. And I said, well, as long as we close beneath the baseline, I'll just see where it goes. I'll wait for the candle close. It closed here and immediately dumped down to here, and I was like, we're under the baseline, we're fine. And we surged down. So we had all of this documented, and same thing here with the baselines here. So now you're getting the baseline to the upside, the cross up event. These things do play out as we did here. That's why we called for the double bottom after they stabbed the 37 billion and created the divergence off of this, and then we started to go up. So these baselines have you at hello a lot of the time. You're at the bottom of the Keltner channel, you got the baseline crossover. We've seen it before and we will see it again. It's the cyclic return of price action. All of this has happened before and will happen again. And you will see this over and over if you become a momentum master trader, and you can trade off momentum. And we're getting this nice little green oversold status. Looks very similar to here. You can get that fake out the rising sun, maybe a few of them before you get the final rising sun out of here. But you're getting that crossover event. So everything's looking good in the hood for that long idea. Let's go to the 4 hour time frame and see what's happening to that. We already got the previous crossover event, and we're holding the baselines. We had a 5 time frames oversold lock in on a 4 hour time frame here, which is interesting to note. When you get these lock in on a higher time frame candle, that shows an extreme pressure to elasticity for that to hold and close on a higher time frame like that. You'll see them a lot on lower time frames because they get locked in history, but they get lost in the 4 hour time frame of these higher time frames. So for a 4 hour candle to close and lock in a number 5 is noteworthy. Similar to here, you had a 5 time frames overbought, and then you started to fade after that. It shows like a resistance. So interesting to note, we're holding the baselines. You get the crossover event similar to here. You got the cross down event, and it just happens again and again. It's why we turn down the opacity on our candles, by the way. And a lot of traders in the Momentum Master Discord are now getting funded using these concepts. Shout out to my funded ladies and gentlemen out there. Link in the description if you want to join that too. We got coupon codes for you in the description for cheap evaluations. Alright, so going to the hourly time frame, you're getting the thinning cloud. We previously talked about that, or maybe we didn't. And we had this cross down event which tried to dump out and reset the hourly time frame. It could only get to here, and now you're starting to see this surge up to the upside with thinning cloud. This is what we talk about in the thing. It says a volume-weighted cloud forms which expands and thins according to the amount of volume in the asset. Price tends to gravitate and retest the cloud as a point of resistance or support. Thick clouds represent strong trends. Thin clouds represent weakness or consolidation points. Keep in mind when the cloud thins, a potential expansion or reversal is in. So this is why I like to make this a volume-based cloud, because it starts to thin and a potential reversal or expansion is in. So I use expansion or reversal because sometimes you get that thinning and no bulls step up to the plate and you bearishly retest and dump. We didn't see that in this case just yet. This could be a stop hunt rise for that to occur. So it just means a pivotal moment, a decision is underway when it thins like that. And it happens over and over again. So we're seeing this curvature and the leading MACD woke up the Williams, and we started to see this Williams wake up to the MACD. And so are we going to see, is this a stop hunt rise before we drop it? 15 minute is overbought, 1 hour is getting there, 5 minute is also getting there, 4 hours also overbought. So we're going to look at that 15 minute and let you know what's going on. So this is New York 9:30, so we're going to have New York opening in an hour, almost exactly an hour from now. So you had this previous cloud. What you do on all of these, it's all fractal in nature. We had this crossover event. We break out, you break out of the cloud, you come back, you kiss it, and if you have the strength to continue, you continue. So if you didn't get in on this long, don't buy into green candles, or you will become just like the fatalities that occurred on these shorts opening into red candles. It's not a good look. So you wait for that strength, support, retest of one of these cloud ideas as this one thins. So you're purple currently, so you're going to see this switch to a different color, and maybe you missed it. So what? There's always another trade just around the corner. So you could come back to this, and then you see this kind of curvature, and then it starts to thin, and then that's your in. Okay, so we're currently seeing the 15 minute get suppressed or pinned by the higher time frame here. One cool feature on Momentum Master B that we don't highlight enough is you can turn on higher time frame and lower time frame stochastics and see how they interact. Let's do that now just for fun, and then we will bid you adieu. Alright, so let's just open it up here. So you have your higher time frame and your lower time frame. Higher time frame is in fuchsia and neon, aquamarine, what would you call that? You have fuchsia and neon blue, I guess, but then you have the blue and purple is the current time frame. This neon color is the higher time frame, so it's a higher energy of that frequency. And then the yellow and the orange is the lower time frame, so it's a lower frequency color. So you have this here, the 15 minute, you have the 5 minute in orange and yellow, and the higher time frame of the 30 minute oscillating between. So right here, when you had this double bottom on the Williams with the oversold nature of it, and you had all these time frames getting oversold, then if we go back to our charts, sure enough, that was the bottom. And you also got a 4 time frames oversold alert to your phone that would have shown you that, and you could have seen all of these lining up in probability, and you could have taken this play to the upside if you were so inclined. And so that's why we have this ability to see that interaction, and it displays depending on the time frame you're looking at. So if we go to the hourly time frame, that Momentum Master B will show that on the hourly and the lower time frame of the 30 minute, and the 4 hour kind of upwards momentum support kind of catching it. So that brought that curvature to the upside. Let's look at this on the 4 hour, shall we? Let's see how that interacts with the daily. So you got the 4 hour time frame coming up here, and the daily time frame coming down, possibly suppressing it, and then you have the hourly time frame looking to come down as well. Interesting to note. So let's go to we looked at the 30 minute. 30-minute is going up, hourly starting to push that and up alongside the 15-minute on the lower time frame. Just an interesting way. There's certain things other people use at different times, and just like my heads-up display, you can toggle them on and off. You don't need to leave them on to look cool. You toggle them as your needs require them, because different indicator components come into prominence at different times. So you get the baseline sometimes first, sometimes you get that alert to your phone first, sometimes you have the reset and the double bottom of the Williams first. I mean, it's all what you're looking for in that moment. So if you already missed this, then the next thing you can look for is a thinned out cloud kiss retest on this 15-minute time frame. So watching this to curve and start to thin just as it thins out here. And yeah, so we broke the ATR here, so we switched the trend on the 15 to bullish. Although this happens a lot on these smaller time frames because they whipped and whacked by the higher time frame, so it's only for scalpers to think about. If you are one of those, you could be range trading these ranges and trying to consider shorts and longs at these discount premium levels within the range for the time being. And yeah, that's about it. We saw the Asia basically did what they do, which is stop, hunt, and rise and like to dump it. Asia is notorious for dumping after pumping it. We always talk about around 10 Hong Kong opens and they rise it before they hand it off in a dismal state to London, and London kind of played with it to take it to its lowest point and then started to reverse it and hand the baton off to New York. Now, when does New York start to give its juice? Well, New York starts to give its juice around 11:30 my time, which is an hour after open. And why is that? Well, that's when London closes. It's just like this. It will tell you on this free indicator, so you don't need to watch other YouTubers who claim it's them. You can just go to this ICT kill zones and look at this in its default setting on lower time frames. It will tell you how the time frame narratives interact. So you'll wait for this London close thing, and basically you can see this as the kill zone ends. You see this short squeeze come up as London passes the baton fully over to New York, who takes the ball and runs with it. Okay, so where do we go from here? Well, I think just to recap, we got these pools up above. We already talked about the liquidity pools and the fair value gap that's in this candle. So this looks like a juicy point of interest for me. So I would see this come up to here. Ooh, getting the breakout right now. Who are they liquidating now? Let's go see who's getting burnt to a crisp. I have a little bit more energy than I did yesterday because I got to leave work early because I reduced my hours. Shout out to everyone that's supporting thus far. So let's see. They just finished off that that guy. So that second character just got liquidated.
Fatality.
No!
Yeah. Yes, use a stop loss, my friend. I'm sorry. And now there's 100x longs opening in 32 million over here into the green candle. They opened up these 100x. So if that suggests exactly what we said, coming back to kiss the cloud. And what is that kiss going to do? Cause a fatality to those 100x if they don't pay themselves. That's for dang sure. And that's what it does over and over again. So it's very fun to study the liquidity because you get to see what the price action patterns actually are, which are traps. They are there to trap you and get you to feel FOMO and do the wrong thing at the wrong time so that they can take your money. It's called cognitive, what is it called? They call that behavioral economics, and they have heuristic AI, which are out to trick you and to try to get you to do the wrong thing. So you'd want to see this kind of rejection off of one of these adaptive kind of liquidation events and then chill out and then go back down to that retest. Now this could be just something that gets pinned on the hourly, in which case Maybe they determined there wasn't all the interest had dropped because there was no real trades opening on these surges, just that small pool. So eventually, when there's enough people in the trade and they realize no more are entering, then they make their move and start their attack. So are they going to start that attack up to this pool right now? If they break beyond this thing, it looks like the volume is stepping up to the plate here. You're getting a green candle. What is the green candle? Well, it's a PVSRA strategy for 200% of the previous 10 candles combined in this one candle alone. So they are repricing the algorithm to come get somebody. Let's see who's getting gobbled up as we speak. Let's see, here's everyone doing. Sorry that I said the wrong. I meant that CPI data not looking good comes out in 5 minutes. There we go. Interesting. I don't know what CPI data looking good or bad even means. That's how little I care about the what the legacy economic people think. So we're starting to see that shift in the cloud here. That's why these cloud thinning, like I said, on all time frames, this is fractal, folks. So you see this thinning of the cloud, boom, you see that nice little signal to think about something. Potential reversal in. When the cloud thins, potential reversal is in. It's why I say it. That's why it's written on the website. So these things are meant to let you be your own guru. You don't need me, you don't need anyone. You just need to kind of see the components in their glory and trust them as they appear, because they do it over and over and over again. Yes. All right. Well, I think that's about it for me for today. I don't want to really go into detail with the other broader market at this time. I'm trying to pass some Bulinox accounts, so I want to get into the modality of that for my Discord members as well. I will do the same thing. We'll be in the live analysis chat talking about potential setups. If you're in the Discord, you can come check it out. And yeah, let's check it out, the NASDAQ live together. All right, folks, that's it for me for today. Thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we will always bring the fire and the precision and accuracy required to garner your attention and keep your attention. So thank you for that attention, and we will catch you on the flip side. Peace.